for your year-end AR review. I will have just two small updates for this group at the very end of the meeting. So just hang on till the end and we'll do some open questions after Nicole's presentation. So Nicole, I'll hand it over to you.
Excellent. Good morning, everyone. Thank you for joining us. Hope everyone is doing well. We're going to spend some time today. We tried to be a little holiday festive and creative with our title and call our session today, Deck the Accounts, Year-End AR Review. What we're really wanting to focus on here today is how can you all navigate some of the challenges that you're seeing with your accounts receivable. We know health centers across the country are navigating some financial sustainability and things of that nature. So we're going to spend some time this morning talking about AR. For those of you who do not know me, my name is Nicole Moscatelli. I am with Forvis Mazars. I oversee our revenue cycle team within our community health center team. Our health center team consists of about 70 or so individuals working in different buckets or pockets in areas of specialty such as cost report, financial consulting, grants management, tax, audit, things of that nature. Like I said, I oversee our revenue cycle team. We work with health centers across the country in helping to do revenue cycle assessments and fee schedule projects, sliding fee projects, policy review, Medicare Advantage wrap projects. So really everything and anything you think of in that revenue cycle space is where we can be of support to you all if you need anything in that area. So knowing that there's a lot happening in our environment today in the industry, we wanted to spend some time working and discussing accounts receivable. So we're really going to try to focus on 3 areas of our accounts receivable today. We're going to talk about outstanding balances, the what and why. We're going to talk about the workflow, the who and the how. And then we're also going to talk about some best practices for managing your accounts receivable. Please feel free to drop any questions in the chat that you may have. You can take yourself off mute. You can raise your hand and ask questions. Stephanie is going to help monitor anything that comes into the chat in case I don't catch it. And she'll stop and interrupt me because I can have a tendency to just get on a roll when I start talking about a topic. So I do want to address questions at the time that you ask them to the best of my ability because they're timely and relevant to the discussion point in that moment. So please feel free to just interject. I kind of like to look at these as just real big conversations with a lot of good people that we can talk through and not only learn from what I can help to try to share with you with best practices, but where you all have an opportunity to help and learn from each other as well, because that's a big part of this collaboration is learning and being able to ask each other questions. You guys are awesome at sharing information with each other. So let's kind of dive right into this. When we think about accounts receivable, right, like just in the high level, in the broad sense, we're talking about money that is owed for a service or a good. Now, most of what you're doing in your world is a service. You're providing a service to a patient. The patient is purchasing that service and they're paying for it by either the means of them having insurance or they're paying for it out of pocket, right? Unless it's a service that is like a vaccine for children where there is no fee for it, right? But just kind of carve that out to the side for right now. Or the good may be the pharmaceutical that the patient receives. It could be if you do dental work, it could be dentures and things like that that the patients may receive. So we are doing both services and goods, but we're mostly doing services in our industry and in our area. Accounts receivable, just for those of us, I'm not a finance person, but for those of us just to kind of think of the finance world, it's recorded as an asset on our balance sheet and it is used in accrual basis accounting. It can cause cash flow or liquidity issues, right? Because when we think about what our accounts receivable really is, going back to the first bullet point, it's money owed to us. So when we owe money to someone else, those are our accounts payable. But when money is owed to us, it's an accounts receivable. So what that means is we've performed a service and we have not yet been paid or paid in full, excuse me, or paid in full for that service. So If we're not bringing the cash in the door, right, that affects our cash flow, that affects our liquidity. Okay. Now, we also can look at accounts receivable, net or gross. And what I mean by this is typically when we say net, we're removing either credit balances, or you're looking at it from the lens of what we really expect to collect as a net receivable versus what we have as our charges. Okay, so we kind of think of net and gross in two different ways. So most of the time it's based on our charges, and it's also based on an aging from the date of service. Okay, so it's not aging based on when you get the claim out the door, when you process a rebill. It's all based on the visit date of service is our aging dates. We're going to talk a little bit more about whether or not we look at um, credit balances included or excluded from there as we kind of go through our topic today. But just kind of wanted to throw these kind of level setting elements out there for us. So when we think about our outstanding balances, which is our accounts receivable, the what, there's a couple questions. Really is what and why. What makes up the outstanding balances, right? It could be a number of different things as we've outlined here, and I'm going to talk through these items. But knowing what is in our accounts receivable is sometimes half the battle. Because if we don't know what's in there, we can't figure out why it's in there, and we can't work for a resolution to prevent it from being in there or others from coming in there into the future, right? So when we think about the what of our accounts receivable and our outstanding balances, it could be a patient balance. It could be an insurance balance. It could also be our claims stuck, right? We generated a charge. So kind of going back to the previous slide where we talked a little bit about the net and gross, if we're looking at it at the charge level or what we actually expect. Typically, I think I said this, but just to say it again, typically it's at charge. So it's typically at gross, but we always want to look at excluding credit balances so that we don't deflate or make our AR look better than it actually is. That's what credit balances do when they're baked into our accounts receivable, is it makes our AR look better. Okay, so we want the good, the bad, the ugly when we're doing this so that we can know what's really underneath that rock when we lift it up. Claims can get stuck in the context of, are they still sitting in your practice management system and they haven't even gone out the door? And remember, I said our AR starts aging from date of service. So if a claim never went out the door, it's in your accounts receivable from that date of service, but you're never going to get payment on it if we never sent a statement out to a patient or we never sent a claim to the payer. It can also get stuck in our clearinghouse. Okay. One of the things that when I go and I do revenue cycle assessments and I'm on site with health centers, we sometimes talk with the billing team about, not sometimes talk, we always talk about, but we always talk about the accounts receivable, and we talk about, are you working your claims that are sitting in that clearinghouse? Okay. So once you process your claim from your practice management system, you resolve any edits or anything in that space, it then goes through like a funnel or a tunnel to the clearinghouse. And anything that's sitting in the clearinghouse needs to be worked. Now, you might have the ability to have some of those rules that are in your clearinghouse also in your practice management system, right? So that you don't have to go into the clearinghouse, maybe on a regular basis. But I don't recommend never going into your clearinghouse because you can have claims that get stuck there, and that could be contributing to your accounts receivable aging and just growing. Okay. The claims can also get stuck with your payer. Again, they're still sitting in your accounts receivable because you haven't been paid yet, but they're sitting with the payer and maybe they got stuck in the payer workflow some way, somehow. So you've got these different places that claims can get stuck. So we need to make sure that as part of our billing process and workflow, we can identify, is that happening? How do we prevent it? And what do we do to fix those that are getting stuck? Okay. We sometimes have duplicate claims. Did you ever look at your denial report and look at your denial codes and you have denials for, we've submitted duplicate claims to the payer? We need to be very careful that at the time a patient is checking in at the front desk for their visit for today, that somehow, some way, we don't create an encounter at that point in time. And then we create another encounter somehow in that clinical workflow, that now we have two encounters in our practice management system for one single visit. And maybe both of them have some charges on them, or maybe they have the same charges. So we need to be very careful of duplicate claims, that that's not also contributing to what's sitting in our accounts receivable. We can have claims that are to the payer that get processed by the payer, but don't end up actually getting paid. And what I mean by processed is they may run it through their system. They may begin some of their internal processing workflows, but it never actually gets paid or adjudicated, or the adjudicated is the general term. It's either going to get paid or denied when we say it's adjudicated. So do we have claims that are in that bucket of that space? We also can have patient balance after insurance. So a lot of times this is what our deductibles, right? Or maybe a co-insurance, that once the patient responds or once the visit happens, we ultimately have to process how do I want to say this? You have to process to the patient. And what I want to talk about here briefly is, in your accounts receivable, is that patient balance sitting with the insurance category, which we're going to talk about the buckets in a minute, or is it sitting in a patient or a self-pay type of a category? Okay. So we've got to think about these, what makes up our accounts receivable. And the final thing that I wanted to talk about here that could be making up your accounts receivable is small balances. We may have a lot of what you may have a policy on that is identified as a small balance. And if we're not working to clean those up, we have the ability for that to muddy up our accounts receivable. And where it can affect our workflow is that we don't want individuals spending time on trying to collect $2, $3, $5 that really isn't going to bring us any value, right? The juice isn't worth the squeeze, okay? When we think about why are the balances outstanding, we kind of touched a little bit in that what conversation, but when we think about why our balances are outstanding, we might not be doing as good of a job as we could with time of service collections. So one of the questions that I ask further into the presentation is, how much of your accounts receivable, when you look at your patient balance components, how much is related to time of service collections, like your copays or your amounts that patients would owe based on your sliding fee discount program? So if we're not doing a really good job of communicating at the time of schedule, at the time of pre-registration, and at the time the patient physically walks into the clinic to collect on those amounts that are owed for today's visit, those become accounts receivable. Those end up getting put onto statements for patients to pay. And the risk of collection of those significantly increases, meaning the likelihood of us collecting once the patient leaves is somewhere in the range of like 10 or 15 or 20% or something like that. Like it significantly drops that once the patient leaves, the likelihood of us collecting is very little compared to when the patient came in, right? At the time of schedule, we don't want to collect money in advance of the patient, but what we want to do is remind the patient of what they will owe when they come in for the visit. The same thing as part of the pre-registration, or if you're doing reminders to patients, we should also be reminding them that any balances that they owe for the visit will be collected on the day of the visit. You can also post signs at your front desk area windows that say payment is due at time of service. That sometimes really does help your front desk staff to overcome some of the awkwardness of the conversation of trying to tell the patient, um, what would you, how would you like to make your payment for today's visit? Right? You owe $20 for today's visit. How would you like to make that payment? We accept cash, check, credit card, blah, blah, blah. Being open to more ways of paying, right? In today's world with technology, I'm not necessarily there yet like everybody else, but I know we have like Apple Pay. Like I do Venmo, but I don't do Apple Pay, or I don't do the Android Pay or whatever those things are. But those are very common ways that people like to pay for their services. So are you limiting your ability to collect money at that front desk because we are not open to these other ways of collecting from our patients? So think about that as part of the time of service. You probably have heard me, if you've heard me present before, you've heard me say this: what you permit, you promote. If you do not manage to collect appropriately from your patients and you permit them to not make their payments, then ultimately you're promoting that that's not something that you're valuing. You're not expecting the patients to make these payments. So we need to set and reset our expectations. And we have to do that with our patients, with our staff, and with our insurance or our payers. Okay. If you let your payers know that you're not going to follow up on the money that they owe or the timing that they should be paying you in, they're going to continue to allow you to not get paid. They're just going to continue to do things on their terms. If we don't set the expectation and reset our expectations with our staff on what they need to do in terms of their workflow, and then I say this in a loving way, catching them when they fall down and they don't follow the workflow, and helping to pick them back up and remind them of the workflow that they need to be following. There needs to be consistency across everyone. We need to be managing what the expectations are and hold people accountable. Okay. And the same thing with our patients. If we don't set the expectation on what we expect to collect and when we expect to collect these things, the patients will just do what they want because there's no guardrails, there's no rules, there's no consequences. Okay. Why are our balances outstanding also? Maybe we're not sending patient statements. Maybe we're not sending them as frequently as we could be doing them. Sometimes what I hear is we don't send patient statements because we don't trust the balance. That's definitely something that needs to be fixed. This could allow you to bring in some significant revenue by doing what we need to do at time of service, but also making sure we're getting our patient statements out the door and communicating with our patients of what they owe us and what their financial responsibility is, and reminding them of the expectations. We don't follow up. We're going to talk about this when we talk about the workflow a little bit, but the follow up and the workflow here kind of go hand in hand. Our balances are outstanding because maybe we don't have the best workflow in place to work these. Maybe we're not doing the follow up the way we could to make things better. Okay. Not seeing any questions in the chat at this point in time. I don't see any hands raised. So just want to remind everybody, if you have thoughts or comments or questions, we'd love for this to be interactive. So please feel free to communicate and chime in and become, a active participant in this discussion. Okay. So before we talk about the who and the how, I want to finally just talk a little bit about the what and the why in the financial class and the aging categories components, right? So think about how you review your accounts receivable. Highly recommend that we review by financial class, okay? But then we also can break it down in other ways. We can slice and dice it in some different ways, which we'll talk about. What I want to talk about here just a little bit on the financial class side of this slide is our Medicare and our Medicaids. For the most part, we know what we're expected to get paid. We're primarily paid an encounter rate from these two payers. So it's surprising to me when I look at a health center's AR aging report and I see extremely high numbers in the Medicare and Medicaid space for older aging buckets. Okay. That right there tells me that we have a workflow challenge because these are two payers that, especially Medicare, if it's a clean claim, Medicare typically pays within 15 days. Okay. There's some delays now and some different things happening, especially when the government was shut down and some challenges. But on average, Medicare pays in about 15 days. So when we start to see greater than 90 days in Medicare is in the hundreds and thousands or more, that's a red flag for me. Same with Medicaid. Typically, you are paid an encounter basis. And again, there's not really a reason, unless there's a problem that the payer is aware of and you're aware of and we're trying to navigate. On the normal day-to-day basis, you really shouldn't have a high AR in your Medicaid bucket, okay? We've got our commercial, we've got our self-pay. We talked a little bit about patient balances and where they're landing. It's best if we can land them into a self-pay or a patient bucket because it makes if you have patient balances that are sitting in Medicare for the coinsurance, it makes it look like at the surface that that money is owed to you from Medicare, not the patient. So it could be deceiving, okay? Medicare Advantage, I would just be curious if you all want to drop this in the chat just out of, it's not right or wrong. This isn't a test. It's not pass or fail. But where does your Medicare Advantage sit? Does it sit in Medicare or does it sit in commercial or do you have a separate bucket? And the reason I ask is, again, if it's sitting in commercial, it might make sense because, excuse me, most of our Medicare Advantage plans act like a commercial plan. But some pay us our PPS and they act like Medicare. Now, I'm not suggesting that you take one plan and map it to Medicare and one plan and map it to commercial because that's going to complicate things, right? And I live by the KISS principle, like keep it simple, silly, but we need to know what's what and we need to be able to break it down, okay? So understanding how it's structured, how you have it set up, and the why behind it is important. And make sure that you're taking time to reassess and work with each other to see if it makes sense to make changes. So I'm seeing a couple things drop in the chat, commercial. With Medicaid, raise the aging category to 90 since you have no direct access to Kentucky Medicaid to fix claims and have to go through the MCO. Great point, Carla. Thank you for sharing that. So again, there's some little nuances of things that you want to put in place, but again, just kind of think about what we're talking about here is just general best practices, but we might need to take a detour on some of our payers or some things depending on the circumstances. In our aging category, what I wanted to point out here is if your team is working aging in the 0 to 30 bucket and trying to collect on anything in the 0 to 30 bucket, they're spinning their wheels and they're not making any headway. I will tell you that right now. That's not where you want to spend time in terms of working AR to try to collect that money. But you want to make sure in that 0 to 30 days that your claims are not stuck like we talked about. In the 31 to 60, we should be monitoring for payment and processing and adjudication, contacting our payers, sending our patient statements, okay? 61 to 90, still contacting our payers, sending patient statements. So you can kind of see, just as a general rule or general idea, what should we be doing when claims are sitting in these different areas or in these different buckets, so that we can try to prevent, because the whole goal of this is we want to prevent anything from aging. We really don't want anything greater than 90. Now, that's not a realistic goal, but that's something that we have in our head. And trying to get to the place where, do we write something off greater than 180 days? Do we write something off greater than 365 days? You all have to determine what your comfort level is of collectability. You should have a policy on when and how you write things off. And then, as far as we talked a little bit before about small balance write-offs, you want to really make sure that you have a policy and you have an automated flow to clear out after a certain period of time and rules or conditions are met, that your tool, your system, will automatically write off any small balance accounts, so that your team is not spending time where the juice is not worth the squeeze. Okay. Okay. The who and the how. Who's working your accounts receivable? I realize in some cases, maybe some of you are outsourcing some of your billing functions. This all kind of applies regardless of whether it's in-house or outsourced work. Do you have one person that is assigned to work accounts receivable? Is the team working accounts receivable? Okay. What kind of training and education is your team getting on navigating this? So a couple things that I want to talk about here is, when we have one person working accounts receivable instead of a team, one, well, one is, that's a lot of pressure on one person. Okay. When you think of the volume of claims and you think of the volume of visits and the activity and working these, and those of you on the call that are in the billing team and have made phone calls to try to work an account in the accounts receivable, you might find yourself on the phone with the payer for upwards of an hour, and it's no joke. And when you have that kind of thing, now some of your team may be really good at multitasking. And while they're on the phone for that hour with trying to get this one claim resolved, they're multitasking and doing some other things with some other things that they can get done. Not everybody is capable of doing that, and not everybody should be doing that. Because when we start to multitask, I don't know about you all, but sometimes my brain doesn't keep up with what I'm trying to do. And we let things fall through the crack unintentionally, right? When we try to multitask. So having one person do that can really not make progress, and they can just be tied up and feel like they're not being productive. They could feel like they're not contributing. So that can negatively affect morale with the team. If the team is working it, then everyone is part of that solution. Everyone is part of getting things in a better place. Okay. And when I say the team could look a little different, right? It could look like maybe some of your front desk staff helps with some things, because there might be some pieces, depending on your practice management system and how you can put things into buckets within your practice management system. If you've got issues from an AR perspective with patient demographics and insurance information, the front desk can absolutely help to resolve those things to get those claims reprocessed, right? So think about how you define the team as to who is working those claims that are sitting in AR, okay? And training and education. Again, we sometimes hear, especially if something is outsourced, oh, the outsourced group does the AR, but they take all the easy stuff. And then we have to internally, inside the organization, we're the ones that are working the harder AR. We're the ones that are working the AR that we have to call the patient and be on the phone for an hour or whatever the case may be, or on the phone with the insurance, or the outsourced company doesn't call the patient. So anything that has to involve the patient, you have to get it back in-house and navigate it. Like, that's not necessarily the best workflow when you have an outsourced project or an outsourced team that's supposed to be helping support you. So take a look at what the expectations are of individuals from an outsourced perspective versus in-house. Take a look at what the in-house staff expectations are, and then training and education. If someone doesn't know how to resolve an account, they may not be coming to you as a manager or a supervisor or a lead to ask questions. So you may not know that this is even sitting there. They don't come to you and let you know that they need some help and support. When accounts receivable is being worked, how are we working it? What we really want to focus on is, are you doing it by payer? Are you doing it by date? If you do it by payer, right, some of the challenge with that is you're only exposed to that payer and you only get to know how they process claims. So if that particular person who does Medicare AR wins the lottery, who knows how to work Medicare AR in your team besides that one person? If nobody else does, we didn't do a good job with succession planning, okay? So working AR by payer is not the recommended approach, okay? Ideally, aligning who works the claims going out the door is how you're going to work accounts receivable. So if your team is assigned to work by clinic or your team is assigned to work by provider, then ultimately you would work that same accounts receivable, because then you can hold, if I'm the staff person, you can hold me accountable for Dr. John Smith's visits, getting out the door clean and working the AR. And the cleaner an account goes out the door, the more likely it will just process and pay and not land in your accounts receivable or a denial. We want to alternate. So pretend I'm responsible for Dr. John Smith's work. We want to alternate when I'm pulling up my work queue in the practice management system to work my AR. We want to work that alternating. So maybe today I work by oldest date, and tomorrow when I do it, I work by largest amount. And I'm constantly back and forth one day to the next, flipping this. Because if we only ever work the old dates, we struggle to get to the newer stuff, but we sometimes may miss some of the bigger dollars in getting those processed. You can work by clinic location, you can work by provider, and the frequency, daily. Not a single day should go by when someone is not working accounts receivable. And unfortunately, all too often, I hear, we don't have time, we don't get to it, we've got to get our claims out the door. If we don't get our claims out the door, we don't get paid. Well, if you get your claims out the door and you're not working the AR, you're still not getting paid. So there needs to be a workflow that basically is a requirement that AR is worked on a daily basis, okay? The other thing that can be affecting your accounts receivable is unapplied payments. And this sometimes ties into the patient statements. You can end up where you have money that you have received from a patient, maybe a time of service patient or time of service payment, and you have not applied that to what is expected to get collected from the patient. So we see a $20 copay was expected for today's visit. The patient paid 20 bucks. It's sitting in the system, but we never married the two. So that $20 charge could be sitting in your AR when you have $20 over here to apply. A risk that's associated with that is that you send a statement to the patient for that $20 and they already paid it. Not good customer service. A number of things can get called into question or be frustrating in that space. So is there a way to automate any of those payments that come in from the patients at time of service to automatically apply to any of those charges so that that's not sitting in your accounts receivable, and you're also not risking sending a statement to a patient for something that they paid. Okay. Excuse me. So this is going to now flip us over to this discussion around some best practices, and I have a few slides to talk about this. Again, I'm not seeing anything else drop in the chat with questions or comments, so I'm going to assume it's quiet. No news is good news, but please raise your hand, ask questions, whatever you guys might need to talk about in this space. When we think about best practices for managing our accounts receivable, are we doing a good job with insurance verification? And many of you are probably sitting back, shaking your head, and you're like, nope, we could probably do better with that. And you know what? Don't beat yourself up. Learn from it. Figure out why you're making that statement that I think I can do better at insurance verification, and try to really make change. Try to affect change in that space. If we're collecting the right insurance information and demographics from the patient, again, those are pieces of information that help to support a clean claim. Okay. If you look at your accounts receivable and your patient AR is growing and growing and growing, carving out what is a copay or coinsurance versus true self-pay, and evaluate, can you do anything to help your patients see if they qualify for Medicaid or another insurance, maybe through the marketplace? Because if that's the case, then you're not relying on your patients making those payments. Okay, you're able to get an insurance involved, and you're more likely to be able to collect from the insurance at a more timely level than potentially what you may see if you have to just collect from your patients. How much of that patient AR is related to copay or sliding fees? We talked about that. Being able to carve that out and know what's under the rock is very important. Do you have a dashboard that on a every day, once a week, once a month, whatever the frequency is that you deem is appropriate? And I would say you want to look at it at least once a month. You want to have this, but do you have a dashboard built that allows you to see how you're doing month over month, year over year with your accounts receivable? Is it growing? Is it reducing? Is one category changing versus another? We know when we saw some of the unwinding of Medicaid across the country, we saw our self-pay shift, right? Instead of our Medicaid from an accounts receivable perspective. So it helps us to know and understand the patterns and trends of what's going on. Metrics and KPIs. I have some here. We're going to talk about those in a couple minutes. Ultimately, are you monitoring? Do you have metrics to monitor days in AR? Do you have metrics to monitor your aging greater than 90 days? One payer bucket versus another payer. So ultimately, we want to always try to monitor our KPIs over a 13-month period. And what we mean by that is it gives us the full year, and it allows us to look this month last year compared to the prior month this month last and last year. Okay. Is your practice management system set up to allow you to have reminders of things that you might need to follow up on? I know Epic is big on the ability to defer accounts. So do you use that workflow in Epic to defer an account? And what that means is I called the insurance today. It's going to take them 2 weeks till I know anything or till they process anything. So I'm going to defer this account, and I'm going to put it to the side for 2 weeks. And then after 2 weeks, I want it to come back in my work queue so that I can remember that I have to follow back up on that. And we have to make sure also we're putting notes within the account so we know who did what and when and what maybe the next step is. The one thing that I would point out with deferring is do you have a mechanism to monitor how long something has been deferred? Because again, a practice management system will have, you can defer maybe for 5 days or 10 days or 30 days. Can you monitor how long something is getting deferred? And can you monitor how many times something is getting deferred? So again, if Stephanie's my lead, my supervisor, and I'm the staff, Stephanie should be coming to me and saying, hey, Nicole, let's talk about your accounts receivable. We ran this report and we can see that you deferred this account 30 days and you've done that 10 times. Do you have guardrails around that frequency? Okay. The ability to manage that is very important. Do an annual cleanup of your uncollectible accounts, right? Like determine what is uncollectible. We talked about having a policy. And if you deem an account is uncollectible, don't continue to carry it on your books. Now, for the finance folks in the room, I am not suggesting that you just go in and wipe out everything at once in your AR of the things that you're saying is old. Because again, I'm not a financial person, but I know there's a financial impact if you go and do one big hit like that. So being mindful of what the workflow and the approach and the best practice would be and what your policy is. And it should be something that you can monitor and manage maybe on a quarterly basis so that on an annual basis, you don't really have very much that's sitting for you to navigate on an annual basis. Okay. You can submit true Medicare bad debt patient copays, patient coinsurance, sorry, that is not collected and it's not paid by a third party or another secondary insurance or anything. That anything that's true Medicare bad debt from a patient perspective can be submitted on your cost report in the year that you write it off as bad debt. It cannot still be sitting in a category where you're making an attempt to collect. It has to truly be written off. Okay. But that's another way of cleaning up your AR and then also being able to recoup some of the money. You can be paid 65% of what gets submitted on the Medicare bad debt, on the Medicare cost report for bad debt, sorry. Implement claim scrubbing rules to reduce time on claim submission, and then the staff can then focus on follow-up. I'm not suggesting that we cut corners, but that's an area that should be a little bit more streamlined and straightforward so that the time can be spent in your accounts receivable that requires some areas that can't be automated. Okay. Automate your patient statements. In this day and age, there's no reason we shouldn't be trusting the data and automating our patient statements out the door. So many times I hear from health centers, they print their statements, they have somebody manually go through every single statement and check the balance before anything gets submitted and mailed. There's ways that can be done more effectively and efficiently. So take advantage of those automation opportunities. Work in the practice management system, not an external spreadsheet. Again, another often workflow that we see is the supervisor or the lead prints out this list of accounts receivable and says, you know, Nicole, you're going to do these, excuse me, these letters of the alphabet. John, you're going to do these letters of the alphabet, so on and so forth. Set up the workflow in your practice management system so that when I come in, I know what my assignments are for my accounts receivable, and I could just get in and start working right within my practice management system. Yes, there are still going to be things that you're going to need to report on and extract from a summary perspective or communicating up through the senior leadership group, but the team itself is not best from a best practice perspective to print a spreadsheet, work from that spreadsheet, and then have to go in and comment and do everything in the practice management system. Define goals and expected outcomes and monitor for progress. If it we don't, I'm trying to think of what that saying is. If it wasn't measured, that's not the word I'm trying to think of. It's not coming to me. But we need to be able to have measurable goals and we need to measure our progress against those goals. Okay. If we don't set those goals and we don't set what those measures and metrics are, we're really just kind of, floundering around in the water and not really making any progress. Okay. We need the map. We need the roadmap. You don't necessarily need to hire more people when you have high AR. You may have all of the people you need. We just need to tweak the workflow and we need to tweak our practice management system potentially to do things a little bit more automated. Involve others. You're not a hero if you're trying to do this all by yourself. You're probably buried and sitting in a corner somewhere. We don't want that. So seek the help of others to come up with a plan on how work can be delegated appropriately, maybe even outside of your billing team, like we talked about with the front desk that maybe can work some elements. Be transparent. There's no way that something can get fixed or resolved or cleaned up if we don't know everything that's out there. Put it all on the kitchen table. We have a saying historically in the BKD world, we put our moose on the table. Put your moose on the table. Get your AR done so that get it out there so we know what's there, and then you can get help from others. And that help might just be an idea of how to do something different. And you might be like, boy, that was a game changer. Okay. Collaborate, work together. Okay. Identify patterns or trends. They could be patterns or trends with your payer. You can have patterns or trends happening at a clinic location, within a service area, by provider. All important to look for that so that you can navigate maybe a huge cleanup because you've resolved one issue that was affecting a number of claims. Please do not forget to celebrate the wins. Celebrate with your team, celebrate on your own, toot your own horn when you do something really great. Okay. When you will resolve something, when something is very successful, celebrate that. Share your ways of doing something with others so that everyone can grow and learn and be successful. We talked about outsourcing. We talked about the small balance write-off and policy and automation. This is just like a really quick, frequency, do it daily. Who is working the AR? Align it with the staff that does the claim submissions. How is it being worked? Alternating amount and date of service. What aging categories are being worked? Really start with 60 days. And then is there a claim reconciliation to know that something is not getting stuck somewhere in the process? So this is just like, if you wanted to print something quick and just give these top quick hints, this is what this slide is intended for. These are just going to be some benchmark slides that I wanted to share with you guys. So you have some numbers. Now, you guys, if you've heard me talk about reporting and benchmarking and KPIs in the past, KPIs are great. They're great for you to take a look and say, here's a benchmark, get a sense of where you're at, but getting to this national kind of benchmark may not be realistic and achievable. It may take you time to get there. And there might be one reason or another that you can't get there. Okay. That may be legit. But for example, percent of co-payments collected at time of service. If you run a report and you see that you're only at about 10%, regardless of what the benchmark is, you in your gut know 10% is not a good number. So what's a good goal for you? If you're at 10% now, do you want to get to 20%? Then maybe you want to get to 40%, right? Like, make it achievable, but stretch so that it makes a difference. Okay. We didn't talk about this. We're not going to get into this on today, but thinking about incentivizing your team through pizza parties, through ice cream parties, through dollars, right? Is there an incentive program that if you can improve your percent of co-payments collected at time of service, if you're at 10% now, set whatever that goal is. And if the staff achieves that and you truly collect that money in, then they get a percent of their paycheck. They get a percent of what was collected. There's so many different ways to set that up, but give them a stake, give them skin in the game so that they can move the needle to make things better. Another group, so this sometimes with MGMA, sometimes we could get some data that is specific to an FQHC. They're getting better with having this data. Several years ago, we typically didn't have any carve out data for an FQHC. So again, just kind of wanted to show this to you guys is so you have some reference of information related to your accounts receivable and looking at some benchmarks. Okay. Our last slide just on this benchmark here, and then we're opening up for a little bit more of a discussion is, again, some additional metrics on your days in AR, adjusted fee for service collection percentage. So just to kind of give you some sense as an FQHC, the different percentiles, the median, so that you have something to try to work to compare yourself to. Doesn't mean you want to set this as your goal, but you want to know where you are and then set a goal for yourself that you feel is achievable, but maybe a little bit of a stretch. And maybe you set it out easy in the beginning because we want to gain momentum. And then ultimately, you can navigate to a little bit bigger stretches. But again, think about how you can reward your team for their efforts because you're going to reap the benefit of what they're going to do. We want to help with retention. We want to help with hiring. That's one way that we can improve some of that in that space of hiring and retention. All right. So Stephanie, with that, it takes us almost, we have about 7 minutes left. We covered a lot. Some of this may be some things that you guys are already know and familiar with. I realize that we sometimes are like, yeah, I get that, but I just can't get it implemented. If there's anything we can do to help, please reach out and let us know. We're more than happy to help or have some conversations. But I'm hopeful that something within this, you can take a nugget and be like, you know what, I'm going to try to do this just a little bit differently and see if that makes a difference. And the other thing that I would encourage is just because you do it one way, if it doesn't work, don't throw in the towel. Try something different, tweak it, get input from others and say, hey, we tried this. This didn't really work the way we hoped. Do you have an idea of why it didn't and what can we do different? So again, engaging people, getting buy-in from people to help make the change can make all the difference.
Thank you, Nicole. And does anybody have any questions, comments, want to come off of me while we have Nicole here still? Ashley Stanley did just drop an evaluation form for this revenue cycle series in the chat. If you wouldn't mind taking the time to fill that out before exiting today. If we don't have any comments for Nicole, I'll go ahead and give two just very small updates. Thank you, Nicole. I did want to just remind everyone here that CareSource Marketplace is leaving the state of Kentucky at the end of the year. If you have any outstanding items with them, I would take care of them yesterday because our contacts are dwindling. So if you have any questions about that, please feel free to reach out to me. And the last thing I wanted to do was just thank everyone. I thought that was coming from me. I thought I was doing like a dramatic little song for a second. I wanted to thank everyone
Stephanie, that
for
was
this
awesome.
year.
Are we doing
I know,
Christmas
right?
music to close this out or something? That would have been
I know, I liked it, a dramatic effect. I just wanted to thank your all's participation for this year. Starting in 2026, you might hear some things from your CFOs that this meeting series will actually be shifting to be more CFO focused. So our CFO sent out some personalized invites to those leaders at your clinics. And we're kind of moving away from, if you all haven't noticed, like specific billing updates and more into revenue cycle management. So if you have any questions on billing or any questions about that transition, please feel free to reach out to me. But I just, again, want to thank you all for another very fast, great year and happy holidays. If you need anything, please don't hesitate to reach out. Thanks again, Nicole.
You're welcome. Thank you for having me. And I hope everybody has a wonderful and safe holiday. And let us know if there's anything you need.